Alrighty, hello and welcome to this week's video review. I think this is the third time I'm trying to record this video. Every damn time I seem to just run over and lose track of myself. So, right, I'm going to start on gold. I think during the week there, I was mentioning targets for the completion of wave 3. So let's do a little bit of charting here, actually. So we've got here is wave 3 blue that is closing out, and the initial target here by the 4-hour chart is shown at 1363.64. So, so far so good on this Elliott wave count. We've got 3 waves up. This nice acceleration here in the center would be the third of a third wave, which is what you'd kind of expect from the theory, where the price would accelerate in a third of a third wave. So at the moment, we're working on wave 5 of 3. I think, as far as I can see, it's wave 1, 2, wave 3, wave 4, and wave 5. Get down to the short-term chart here. There's kind of a little bit of to and fro in what's happening in wave 4 here. So let's talk about that for a second. The current count shows wave 4 as possibly complete at the low of the week there. I think it was 1332 in the cash market. Or was it 1333 cash market? But anyway, I have a little bit of a problem with that, seen as, well, it is a 3-wave decline. It's easy counted as an ABC 3-wave decline, but it's quite short in comparison to the previous wave 2. So you can see the previous wave 2 there took about a week to complete. I think it was the 11th to the 15th, something like that. The 11th to a low at the 15th. So 4 days and change to complete. I would expect a longer kind of affair here rather than a kind of a day and a half that we got. So what I'm kind of positing here is that maybe we're seeing an expanded flat correction in wave 4. So that'll be a rise in wave B to a new high, and then a decline below support to wave C to complete. Also, there is the possibility of a triangle wave 4 maybe completing. Next week should clear that out. So far we have 3 waves down, and this rise here does look quite, it counts well as an impulse rise. So the possibility is there that wave 4 is complete, and we're now just rallying in this wave 5 brown, which would complete wave 3, which I pointed out in the first chart there. So the target on the short-term chart is a little bit higher than the target on the 4-hour chart. So we're talking about 1372 on the 30-minute chart here, and that's given by the Fibonacci extension of wave 1 from the low of wave 2. So you take the height or the points traveled of wave 1 in the Fibonacci extension, and then you project it from the low of wave 2, and then that gives you price points along targets. Right now we're eyeing up the 261.8 target there, and that gives us 1372. So this week we could see a further acceleration in wave 3, 4, and 5 to complete at between 1363 and 1372. If we start hitting that, those price points will probably start to look for a flattening out or a corrective decline in wave 4 blue. So that's the outlook for gold. Continuation up to 1363 maybe, and then we'll start to look for a turn into wave 4 blue. Right, let's move on to stocks. Clean out my desk here for a second. Let's move on to stocks. I want to keep this a little bit shorter. Man, I tried to record this video a few minutes ago and it just went on and on and on. stumbling over myself. So right, get to the point then. I get to the point. Okay, so 4 hour chart. This is what I'm talking about here. Impulse down, correction up. Impulse down, correction up. So far, impulse down, and we're in a correction. So what we could be talking about is 3 degrees of impulse moves to the downside in what could be a possible, counter. Sorry, right shoulder here for the corresponding left shoulder, which kind of completed over June and July. So off the all-time high, we could be seeing this kind of expanding pattern to the downside in waves 1, 2, 1, 2, 1, 2, 1, 2, and then wave 1 and 2. Right now, we've the pattern has found some sort of kind of oscillating support around the rising 200-day moving average here. If this 200-day moving average, plateaus out and the price starts to use it as a resistance rather than a support, well then, we're talking about something pretty serious at that point. Everything from a valuation standpoint, from a kind of a psychology standpoint, from even the wave count standpoint, everything points to a top imminent and possibly right now. Even from classical technical analysis, when you look at this left shoulder here that was built over the start of the year in the previous wave 4, and then this smaller degree left shoulder that was built over the summer, and now we have a building right shoulder into the autumn, which could spill down into a further right shoulder to correspond here, and we've got a very large, in that case we've got a very large important neckline there at 20,000. If we get impulsive moves down into 20,000, this market could begin to just spill over. I mean, the next real serious support you're talking about is down here, at 15,000, which was the previous summer kind of 2016. This kind of excuse me, corrective pattern in wave 4. And you could actually go back to my old videos, and I was pointing at this these lows here, calling for new highs into, I think I was calling for 18,000 at that point. What it turned out to be is 22,000, but always underestimate. Always be modest in your in your projections. All right, so for next week, never mind the long-term projections for the moment. For next week, I want to see how this initial declines, these initial spills to the downside, kind of develop. We could see developing of 1, 2, 3, 4, and 5 in. I think that's how I labeled it on Friday's chart. Is we got 5 waves down in wave 1, and then we might get wave 2 completing over here somewhere in a 3-wave rally. So it's kind of up in the it's up for grabs at the moment how this develops. If we see this extension of wave 3 to the downside, or if we see this development of another further wave 2 pink at 20,800 kind of level, 21,850 sorry level. So for next week, it's kind of watching this this rise on Friday and see if it develops into a 3-wave affair in wave 2. That's the short-term outlook. If that happens, again, we'll be looking to the downside off that high. Okay, we'll go to $2 yen, the bane of my life. Right, what we changed to this week was a further extended kind of correction of the recent highs of not so recent actually, 118 high there. So we're talking about a 3-wave decline into wave A. I'll leave that there. 3-wave decline into wave A, 3-wave rally into wave B, which turned out to be a kind of, I think it was a double combination, really, was what I call that. And now probably talking about another double combination in wave C. Wave C, I have initial target of 106.50. I think that's where the Fibonacci support was kind of coming in at. Yeah, 106.55, 61.8% retracement of the previous rally off the lows. So the January 17, the low at, the high at, December 16 was 118. And from that point, we're watching a three-wave decline, excuse me, in a possible wave 4, or let's just confuse this a little bit more, a possible wave 4 or a possible wave B. So let's see how this, for this week anyway, the initial kind of interesting point or point of concentration is this 106.55 level. So that's the 61.8%, Fibonacci 61.8% retracement of the rally off the lows. And right, I think that's pretty much all we can say about dollar yen at the moment. Once we get a closeout here at 106 level, if we get a bounce again, which has if we get a bounce with corrective declines, we'll again be looking to the upside in a possible wave 5. Okay, let's move on to pound dollar. Pound dollar now has approached again significant resistance here at 132.67. This is also the invalidation for the short-term count off the high, which is that kind of 1-2 count that I've been working at to the downside, which should turn out in, which should spill over into wave 3 to the downside. The reason why I'm concentrating on this being the beginning of a new trend downwards in wave 5 blue is because of the complete nature of the previous kind of corrective rally. So we had, if you watch wave C, red here, it unfolded out of this contracting triangle. It unfolded in 3 waves. It finished nicely within this parallel trend channel here. And we got an almost 1-to-1 ratio between wave A and wave C here. So that's why I called wave C complete at the 132 level. And it hit targets. It hit target at 132.50. I had a target at 132.50. It reached 132.67 or something. And then just, it began this nice decline off that high. So for the moment, into the low there, we had almost 500-point decline, which is significant. But off that low, again, we've had this rally, which can still count as an ABC rally to the upside. It has turned over the last week and a half into quite an impulse move, but an impulse maybe in a wave C. So let's get down into the hourly chart here. I was working with this nice parallel trend channel ABC in wave 2, but we burst out of that. We burst higher there on Friday, and it's brought us up to resistance, which again it's a little bit worrying for the short-term count. I don't think the long-term count changes at all whatsoever. We get a slight change in the pattern of the correction, but it doesn't change the fact that this market is going to decline most likely below parity in wave 5 blue. So excuse me. That's the reason I like to put so much work into the short-term counts. If you can pinpoint this short-term count, this is a long way down to ride if you can manage to stay in that and possibly add to positions on the way down. So for next week, I want to see this this level here at resistance 132.68, I think is what it came in at. I want to see that level hold. I want to see further kind of lower highs off that wave 5 high there, which it's just going to have to be a wait and see at the moment. We'll see how the overnight and how Monday turns out. If we get a new impulse move to the downside, well, then we're kind of away to the races, and we've got a possible wave 3 green underway. So that's what we watch out for on Monday. Now, euro dollar. I kind of don't even want to talk about euro dollar. It's such a disastrous, damn disastrous currency. But anyway, the 4-hour chart. Again, exactly like pound dollar, even though this is quite a large rally since February, this rally is a corrective rally because it's viewed within a larger correction. So we have a possible A, B, and C, which I'm kind of veering away from at the moment. Most likely what we're seeing is a larger A, B, and C. Again, it's like I keep calling it, a distinction without a difference, because it's viewed within a larger correction. So it's a 3-wave rally either way, and we're approaching trendline resistance. We're approaching Fibonacci targets at 122 again, and the momentum situation on the 4-hour chart has hit, it's a double top here. So it's a declining double top, which I failed to mention on Friday actually. We've got a declining double top here on both MACD and RSI. So the upside momentum has again died. And what we should be looking for is a turn in the larger pattern. So let's get down into the short term to see how that might trace out. So what I've been kind of looking at here over the last day or two is this rise within the final pattern here in the trend line here, in this trend channel, sorry. The best way I can count it is, if it's a 5-wave pattern, the best way I can count it is a wave 1. Wave 2 would be a running flat, which is a wave A, B, and C, wave 2. Wave 3 is pretty straightforward, 1, 2, 3, 4, 5, wave 3. And again, this strange pattern here, which caused a little bit of confusion lately. Last week we were looking at a nice kind of impulse move to the downside with what looked like 3 waves up from a high, and then we just drifted sideways and then spiked higher on Thursday, which kind of it ruined that pattern, which was a decent signal. But what I think could be occurring here is a larger triangle, contraction triangle, possible in wave 4. So we have wave A down, wave B possibly finished, wave C, D, and E to come, maybe. And then we get a punch into the 122 target to complete. I don't see any way of labeling this particular rise here over the last week. I don't see a way of labeling that as a 5-wave rise. It just does not lend itself to that. You could maybe say that high here at 120.90, was it 120.90? Well, that high could be viewed, as the top, but I don't think so. I think this will develop into a it's looking like a contraction triangle, really, if I'm being honest with myself. It'll just develop into this contraction in range and then a pop to the upside, possibly in this wave 5 brown. So that is the 5 markets complete. I think gold is going well. Dow is kind of, it's up in the air at the moment as to how this will play out. I still think we have the top in. I think the top is complete. What we're really looking for is a kind of another lower high and an acceleration to the downside. Dollar yen, we need to see completing. The initial target is 106.50. Pound dollar, I want to see this 132.68 high to hold, and then to again spill downwards in a possible wave 3. And euro dollar, like I just said, a possible contraction triangle. So that's it for the week. I'll talk to you on Monday evening. And I hope you have a great weekend, and we'll see you then.